Karen, there's a sizable amount of uncertainty in the economy, in the markets, to say the least. In your view, how is this affecting the fixed income market?
We're seeing the fixed income markets are actually a really important component for people right now. As the equity markets continue to gyrate every day, we're seeing, up, down. Fixed income can really come in and be a stabilizer in portfolios. So you have to go back over 10 years to really see 4% income across the board. Now you can get that in treasuries, government bonds, really core parts of the fixed income market. So I think a lot of investors are coming into this year underweight fixed income, overweight cash. So we are seeing some of that cash move off the sidelines, and people are using, for example, fixed income ETFs to really customize portfolios today.
And 10 years ago, people were probably buying fixed income mutual funds. And now, as you said, they're buying fixed income ETFs. Why are fixed income ETFs better than mutual funds or just buying the bonds themselves?
We're seeing a lot of people are adopting fixed income ETFs as a part of their practice, in part because it offers daily transparency, the exchange tradability, and it's low cost. So people can build portfolios themselves. They don't have to go out and necessarily hire an active manager. They can very easily put together the precise exposures they want with more control. So I think that's really driving bond ETF flows today. And in fact, 40% of all flows this year in fixed income have come into ETFs, which is about double the amount we've seen over the last few years.
And specifically, where? Is it into municipal bond ETFs, government bonds, corporates, high yield ETFs? Where's it going?
We're seeing three big categories. So first is around government bonds. A lot of people are still going to ultra short. They want those T-bills. SGov, which is our 0 to 3 month Treasury ETF, has seen about $8 billion of inflows. They're barbelling their government bond exposure with longer duration securities as well, like TLT, TLH, for example. We're also seeing people look for income. So anything that's offering income, whether it's high yield, multi-sector income, like our iShares flexible income ETF Bank has seen pretty strong flows. And then finally, they're building bond ladders. You can actually build bond ladders with ETFs, term maturity ETFs called I-bonds. And we're seeing that's a big category this year as people are wanting to lock in those yields.
And how do you see the rest of 2025 playing out? In your view, what do you think the Fed's going to do, and how's it going to affect all those bond ETFs that you're selling?
We're currently seeing the Fed priced in about 3 interest rate cuts this year, which would get us to an overnight rate below 370. Next week is actually the summary of economic projections. So we're really looking forward to the Fed coming out and seeing what their inflation and growth forecasts are for the rest of the year. But what it really means is we could see some reshaping of the yield curve. Front-term yields coming down. As if investors want more of a term premium in the long end, that might come up. So we're really advising people keep it short, stay in either that front end of the curve, or we like the belly of the curve, which is 3 to 7 years. Seek diversified sources of income. And then finally, inflation protection. If inflation keeps kicking in, use tips, for example, as a way to immunize you from that.
And then finally, I want to bring your attention to a brand new asset class that we haven't heard a lot about in the last few years. It's called cash. So tell me what's going on with regard to ETFs and cash.
Well, really in the cash space, we haven't seen any sort of innovation in the last 50 years. We've seen a lot of regulatory changes with 2a-7, but not really any innovation. So this year we've actually launched 2 money market fund ETFs, PMMF and GMMF. And they both adhere to those 2a-7 money market fund regulations, but they really offer investors choice and flexibility with how they choose their cash vehicle. So we've already seen almost $50 million come into these 2 ETFs since we launched them a few weeks ago, but we saw over $1 trillion coming into money market mutual funds. So I think we'll continue to see people looking for ways to diversify their cash, and that's why we came up with money market fund ETFs.
All right, well, thanks for coming on and talking about it.
Thanks, Greg.